Begin the presentation. Press the.
All right. Good evening, guys. Ken at Tortoise Capital. This is the nightly strategy podcast for Tuesday, December 8th, 2020. Let's start with the market health check here. So we made a new 10-day, 30-day, and all-time high today. We opened up with a slight gap down. Broke to a new high and then held most of that gain into the afternoon and into the close. So pretty impressive performance these last 10 days. Whoa, it got a little too big there. Sorry. What's really struck me is that after this great big gap up that we had that broke above the Z3 20 days ago, we've really had low volatility lately. Oops, I'm sorry. This should have moved up into here. How did I miss that? I must not have saved. And then our 10-day range is still around 4% from the 10-day high down to about the 10-day low here. That should be in here. Sorry about that. We'll get that fixed tomorrow. That's probably 3.5% on the 10-day range. Things happen. But I'm really struck by the lack of volatility that really is standing out here. That's the dog that didn't bark. So we closed above the previous all-time high close here. So there is that slight fractional up for that. We stayed out of the dragon altogether. The low of the day held support at the dragon. And there's our Z1, spine of the dragon, and belly of the dragon. So we're in good shape support-wise there. Our PSAR was not even close to being threatened today, and that's at 361.5. And tomorrow that PSAR will creep up to 362 3/4. For tomorrow's PSAR. So those are like the three support levels that we would have in place tomorrow before the PSAR would be challenged. You know that the dragon peak, top skin of the dragon, 367.50, which is also the one-day low. Then the spine of the dragon, belly of the lower skin of the dragon, then the PSAR. So all of those would be in place, and that would preserve, all of these gains here at a minimum. If you use this, you would preserve all of these gains. My personal preference here would be Z1. I just am nervous about this lack of volatility and the risk C being so high, and all of the COVID bad news. I just think is continuing to power north, but I'm worried about volatility spikes here. But all looks good on the S&P. All right, let's take a look at the sectors today. See what we got. All right, so we had the S&P up basically 0.3 today. And let's see what else we got here. Treasuries and diamonds were up slightly better, 0.37 and 0.47 respectively. Where are our small caps here? Looking for IWM. IWM had a really strong day at 1.28. So just kind of a grinding northward move with treasuries, diamonds, and the S&P. But the small caps, that speculative U.S. symbol, is just cranking higher. Let's take a look at the sectors that did well today. So tech was marginally better than the S&P, not much better, 0.32. We have Mexico, 0.5, materials, 0.56, along with that quality, low volatility at 0.58. Healthcare, 0.75. Wheat and precious metals and commercial real estate, Simon Property Group, 0.8. Steel up a very strong, basically 1%. Energy 1.5%, along with oil exploration about the same. And clean energy making a strong move. So it bottomed out down there around 87-ish and is now back up to 93. So it's about halfway back to its all-time high. And then just the big winners today, just really remarkable. U.S. Steel, just out of its mind with goodness, 13%. It's pushing 20 today. A month ago, it was 7. So that's a 180% gain in U.S. Steel. You heard it here first. Cliff Natural Resources, a respectable, Cliff's Natural Resources here, 3.5. Nucor was at 1%, so and then steel was up 1% also. So some real standouts here in the steel sector. NIO, Nikola, and Tesla. So that's our 3 electric car companies. NIO from China at 3.2, Nikola at 2.6, Tesla 1.27. So strong representation from the electric vehicles there. DuPont recovering with a 2.5%. Here's our triple techs, TECL 1%, and triple Qs up 0.9. Rounding out with Walmart, Microsoft, Amazon, Apple, all the usual suspects, slightly better than the Dow here, or better than the S&P. All right, the sectors that underperformed today. So we've got Japan and Brazil at 0.23. Emerging markets, oil and silver, all basically flat. Financials and the FANGs, also basically flat. The Ackman hedge fund down 2.25, 2.33, I should say. VIX down 3.5, and then Bitcoin down 6 2/3%, under 21. I bought some today, intraday. I'm starting to rebuild my swing position on that one. I like it being 20% off its high. And there was some intraday evidence of strength. So we'll try that. I'm going to try that one as a swing. Companies that underperformed today, starting from the bottom. So we've got NVIDIA down 2%, Virgin Galactic, Palantir, and Twitter down about 1.2 to 1%. Boeing, Alcoa, Home Depot, and the industrials down a half to a third. Win basically flat. Devon and Cat underperforming. So to me, the real story up here is that doggone U.S. Steel. I don't know how much more juice is left in that for the squeeze, but man, is that something else. This was the U.S. Steel move today. We're going to see that trade in a minute. But on a monthly basis with hourly charts, I should say 3 monthly. God dang it! Come on. There's something about the GoToWebinar that disrupts that quote server. It often interrupts. I never get that issue during the day. It may make me want to move to Zoom altogether. All right. Well, we'll come back to U.S. Steel. All right. So we've seen the daily health check. I want to go to Tesla. So Tesla 2 days ago was up here around 650-ish, and then yesterday sold off, and this morning sold off some more, and ended up coming down in about $30 off the top, down around 622. I should say, let me get that arrow straight. All right. All right, so it gapped down, sold off, and then it gave me this. There's a Z3 pinch right here, and I've got a swing position on in Tesla, so I'm not interested in going short. I was very close to just pulling the plug on the swing trade here, but I held off for another day. But this pattern here is something we call fake one and go two out of the Z3 pinch. So when you have a Z3 pinch like this, and you actually have a super pinch because you have all four regression lines inside a very tightly pinched Z3. That makes the breakdown very interesting. But if that breakdown doesn't follow through to the downside, if it just does like this, it comes down and then reverses stronger. That's what we mean by fake one and go two. You take that, the size of that move, and it's not unusual to see it go not only retrace, but to go two more in the same direction. So that's what we mean by fake one, go two. So this was a case where if I had been trading this to the short side and I get short there, then typically I will scratch that right here when it comes back to break even, and then either enter here or just wait for the where I actually entered when it turned into summer. But you can legitimately stop and reverse at that yellow dot, and that's the fake one go-to pattern. I waited for the supported spring crossing really to become a supported summer crossing, and to get a couple bars past the Bollinger Band mean, and so we're long there at about 626. Usual stop. I tried a second position on this one after the Z3 breakout, and then it collapsed. So I wanted to, I decided to get out of that, and then it held support typically right after I exit. It held support at the Bollinger Band mean and the VWAP. So I go ahead and re-enter. It collapses quickly, so again I run scared and basically scratch out of that one. I'm a little bit slower to get back in on this one, On a better day, if I hadn't had the last two trades go against me on that one, I might have been in down here when it crossed the, we get the RLXD, but I waited for the Z3 breakout to hit, and that's at about 630, 636. And that holds. I was, I think, slow getting the second position on about 647, and then it tops out up here. And the second position is basically a scratch because it gets me out right about where I got in. But the first position on that one was pretty nice. So that was Tesla. Not my best work, but reasonable given how it highly valued this thing is, or high priced it is. All right, so this is U.S. Steel, and on the intraday, so this is a set of turbo trades on something that we've had a swing trade on since it was at 9. So here's yesterday's close in the VWAP. It immediately starts rocketing north. So on a 25-cent risk box, I go ahead and get a hybrid frog entry on this one, and that works really well. It held support after this spike in heavy volume, and then gave me it crossed the baby dragon, held support at the dragon, continued to move. So we get that second position. I take the sniper exit on this when it comes back and hits the PSAR at like 1865. So that's a dollar gain on a 25-cent risk. So that's 4R on the first trade, on the first position. This one's a 4R entry. This one is probably 1. So that's about 5 execution R. And note the orderly move of the PSAR all the way up and exit. And then it doesn't sell off harsh. It does not come back all the way to the VWAP. It holds at the Bollinger Band mean. And then it gives a RLXD crossing and a PSAR flip. So I re-enter the position. And in this case, if you were mathematically precise, I suppose, your stop could be as tight as this, 15 cents. I like using or actually about 10 cents. I like using the 25-cent risk on that one, so I kept the same position sizing on it, and then I get the second position in. Get the second position here when it breaks above the Z3. So I like seeing where the Z3 pinch was, and then when it clears that, I go ahead and get the second position on, and that one scratches about 10 minutes later. And so this one's probably 2 more R. And I'm not interested in the short side trade on this one at all. So that was a pretty good trade in U.S. Steel. So in the afternoon, U.S. Steel, I'm staying with it. This one gives us, this gives us a peak, a lower high, a low, and a lower low. So this sell-off here feels like a winterish kind of move. When I put all that stuff together, that's almost a 30-minute move from 1916 down to 1885. That's about a 25-cent move down. And then I want you to notice this pattern in here. So we've got the PSAR flip on the downside here, as this is selling off. And so now we're about 7 or 8 bars into it. And now right here, we've got the peak adverse move on the RL10. So right about this point, as this starts moving up, I'm tracking a trailing PSAR entry. I talked about this one yesterday. Let me try to show you how that works in practice. So as this is moving down, I just keep tracking it down, trailing it by 1. And here we get the breakout. So it's the RLXD. You'll notice the PSAR hasn't flipped yet. You know, the PSAR doesn't flip to over here, and we'd be getting an entry up here at the top of that doji. But because I'm trailing that PSAR dot on the way down, I get the entry here at 1902 with about a 15-cent risk. And then the winter turns to spring, turns to summer, brief moment in the fall, back into summer. I add a second position because it looked like it was taken out this Z3 excursion level, all this stuff in here. So I go ahead and add the second position here. It continues to move up. It has like a triple peak up in here and then starts to sell off. And it gives me the RLXD and the PSAR stop, and that felt like enough. So we're out of this thing at about 1940-ish. So we've got to move from 1902 to 1940. So that's about 40 cents on 15. That's probably 3R plus another R from the second one. That's about another 4R in U.S. Steel. So U.S. Steel just acting like a growth stock. It's just crazy. And it gives us a 13.25% gain on the swing trade that we've got on. And so what we just looked at there was just the turbo action on it. So that's pretty nice. And it's still not cooperating. You know, screw it. All right. All right, let's go ahead and shift to the daily report. Okay, so here's the daily report. Let me let that come up on your screen. Oh, Christ. All right, so we are still in bullish quiet conditions. Let me let that come up on your screen. Yeah. Bullish quiet conditions, overbought on every measure. It's quiet. It's almost too quiet. And when you see the risk Z rolling over like that, that's why I'm concerned about, although I enjoy the grinding up, and I like the fact that we've been overbought for the last 10 days. All I can see is the negatives and the risk. And the risk Z has actually rolled over. It's now under 2. It's now starting to decay. So when you see this period of decay, what you actually have is an increasing probability of a adverse volatility spike to the downside. So I'm a little concerned about that. ATR percentage, it's under 1 now. It's 0.95%. Unbelievable. At the height of a pandemic, and there's just no volatility to be seen. Hard to explain. Channeling and overreaction, getting things done. No signals, though. The 10-day min pains, the ones that are crushing it, close to their 10-day high. Cisco, Johnson & Johnson, Goldman Sachs, Honeywell, Apple. Apple's turned in a nice performance here over the last week or so. We still have some laggards here with Salesforce, DuPont, Home Depot, McDonald's, Chevron. Only 4 dojis today in the Dow. That's kind of surprising given it was such a low range day. Salesforce continues to offer a nice reward to risk ratio, as does Home Depot, which lost a little bit. Now look at Home Depot. It's down over the last 1 day, 10 day, 1 month, and 3 month. It's one of the worst performers in the Dow. After all summer, it was one of the best performers. Remarkable. Nike has no signals on it, but it's sure showing strength on a breakout on every time dimension today. Same with Johnson & Johnson. Most of the swing signals, all these mechanical swing signals up in here, require some kind of measured pullback to give us the ability to frame a trade back to the previous high. So the fact that we're trading so near that 10-day high means it's rare to have a lot of signals on these. So like the only ones we have, Home Depot is channeling overreaction and a 5-day down. That makes it very interesting to me, especially with a 4.2 to 1. That's worth framing. And then McDonald's is a 4.3 to 1 with channeling and overreaction. So those are both trades that I would be looking at to frame as a swing trade. And I would try to get a turbo on them intraday. All right, in the ETFs, not many signals at all because of the lack of volatility, but I just want you to notice on the NDX just how many things broke out of previous trading range highs today. So the Russell made all-time highs today. Mid caps and tech. The S&P made all-time highs today. XLK technology and XLP consumer staples, healthcare, and then metals and mining. Not surprising when you look at U.S. Steel and you see how well the metals and mining did today. Some remarkable moves. In the auto framer, let me let that catch up for you. The auto framer has some interesting defensive plays in there. Salesforce, McDonald's, and Home Depot are all like value plays. Those I would consider to be like catch-up trades, that they've been lagging the rest of the Dow, and there's a really good trade multiple to the 10-day high, so that's why they're on that list. The daily squeezes, a lot of good ones today, again, because we've had such tight ranges that any breakout from the previous day's range is going to give you a nice multiple on these. And so you got real estate, Salesforce, McDonald's. You have Home Depot, the S&P itself, Honeywell, and emerging markets, and even Apple's at 2.0 to 1. So all of those are worth looking at as a core and turbo trade, that if you could get an intraday turbo trade on those, and it broke out of yesterday's high, or today's high, I should say, then there's a nice possibility of those things really moving nicely, and you get some amazing reward to risk ratios on those. The symbols in the summer are just crushing it right now. Metals and mining and tech seem to be in the ascendance right now. Brazil's still doing pretty well. And then in the Dow, I really like Apple and Honeywell. Last chart up, the multi-time frame NDX summary. Just see how many ETFs broke out today. Just a remarkable number. And that's where all your leadership is right now. It's metals and mining, the Russell, mid caps, and U.S. tech, the S&P. So it's just right down Main Street right there. That's what you want to be looking at right there. I'm going to keep milking U.S. Steel for as much as I can. That's like my priority trade right now for both swing trade management, but also intraday turbo. Clean energy is coming back online for me, so I like that one as well. All right, guys, that's everything I got for you. We'll get this published and posted in the usual place. Take good care. I see Betty in here tonight, and Eugene. Just always good to see you guys. Our good friend Joe Greco just had some sad news in his family, and so I would ask for your prayers for Joe and the tough time for him. He would benefit from your goodwill. So if you can pay that forward a little bit, Joe Greco, keep Joe Greco in your prayers. That would be a good thing. You guys take good care, and we will see you in the chat room tomorrow.